Check, please.
Hey, welcome back to Everything Money. We're going to give you an update on two colossal companies, AMD and PayPal. They're not related so much, Paul, but it's a tale of two earnings stories and what happened. There's this battle out there, Paul, between Intel and AMD. Obviously, you've chosen your side and elaborated on it many times. People love to come back to our old AMD videos and grill your ass when you're wrong about AMD. But we're going to go over some of the numbers in this video, show you the financials about where we stand. And in essence, Paul, I really think we can do some explaining about why we invest in Intel over AMD and our thoughts. So take it away, my friend.
Guys, thank you, Seth. First off, two simple things I want you to do for us. I want you to follow our Instagram account, Everything Money Investing, and follow Seth, Mo, and I personally, because it really makes us feel good when we see our growth. If I told you a company was going to announce 23% increase in its transactions in the quarter, what would you say the stock was doing today?
Flossing.
Okay. What we're talking about here is PayPal.
Yes.
Let's pull up PayPal in our software.
PayPal's the volume of payment processing went up 23%. Is this from last quarter, Tim? Good God.
Probably from last year.
Year to year. Yep.
Look at the stock today. So why is that?
You tell me.
So guys, this is where this eventually a crash that happens will be hopefully for you, you're on YouTube trying to learn. Mm-hmm. And hopefully because of that, you're going to sit there and say, wait, that doesn't make sense. This is kind of a trickle of that. How is a company's transactions up 23% year over year and their stock is 25% down today?
Net revenue up 13%.
Revenue up 13%. And the stock is down 25% today. This goes against everything that everybody says. This company is growing. It's doing this. It has great potential in the future. How's it down 25% today? This is Mr. Market. Mr. Market is highly emotional and stupid. They probably didn't hit, this is PayPal, they probably didn't hit some number. They're expected to do 25%. They did 23%. This is what happens in markets, guys. Your job as an investor is to learn when the market reaction is different than the actual results.
This is just
now, I'm not saying buy PayPal.
Important. This is incredibly important. And it took me years to comprehend this. It's like, say it again, Paul. It's like,
it still takes me time to comprehend this now. I'm still not fully great at this one. But guys, the market's going to react in weird ways depending on 1,000 factors. What you need to be able to do is take away all the noise and say what makes sense here. The same way when transactions are up 13%, the stock's down 25%, the same thing will happen in the reverse. Results will be expected and they're just going to go to the moon. Why? Because the average retail investor on Robinhood or something like that, the pimply kid who's 18 years old who, jerks off the Playboy magazines is buying a stock and making the stock go up for no reason whatsoever. The stock market is a marketplace. The more demand for a company, the higher the price goes. The less demand, the lower the price goes. And demand is built on perception. Right now, PayPal has a bad perception in the market as of today. Where was PayPal? It hit $310 in the last 52 weeks. Can we find a PayPal video and then we can see what I said about it?
I'm doing it right now.
Great. So guys, in the last 1 year, it hit $310 a share. It is currently at $130. Guys, if I told you back here in July that the PayPal would be 7 months later at $130 a share, you know what you said to me? Paul, you were the dumbest person I've ever met in my entire life. I've been like, okay. This stuff happens all the time. It happens all the time. And the most overpriced companies get hit the hardest. So guys, this is our Everything Money software. More on how you can get this later, but we usually do an 8-pillar process. We go through each pillar individually. But now with our videos, we're trying to save a little bit of time for you so you can watch more videos and get more content from us. We're just skipping right to the 8 pillars. At the end of the video, Seth will tell you how you can get the more thorough analysis of our 8 pillars so you can understand it better. But here is PayPal. Seth, what do you see here?
Yeah, so Paul, this just screams valuation when we have those two metrics, pillar 1 and 8. But the problem is, Paul, this stock was $308 in August. It's now $131 today. What in the hell was the valuation 6 months ago? I mean,
it was based on some sort of perception. PayPal was up a lot, earnings were up. Whatever the reason is, there was some story given that was saying this is a great story. I have found in investing, when you keep it the simplest form is when you do best. Guys, our 8 pillars, Their return on invested capital is great. They have revenue growth of the last 5 years. They have net income growth of the last 5 years. They're buying back shares. They have very little debt compared to their free cash flow. They have 5-year cash flow growth. The problem here we have is valuation. Now, does this mean that PayPal is not a good buy? Not necessarily. Remember, 2 companies are exactly the same. One can grow 20% a year, one can grow 5% a year. Which one do you pay more for? 20% a year, obviously. I say this all the time. If PayPal is going to grow 50% a year for the rest of the time, I would gladly buy PayPal all day long at this price. All day long. You want to hear something crazy? PayPal was over 100 PE, right? 5-year PE just a few months ago. So what we did was we created a stock analyzer tool. Every investment is the present value of all future cash flow. We make assumptions in the future, tells us what to pay. So we can factor in, let's go to the stock analyzer tool in our software. Very first line, revenue growth. So when I hear all the haters saying, Paul, you don't really value growth, it's the very first line of stock analyzer tool. So let's see what we have PayPal worth. Seth, you want to say something?
I couldn't get away from the fact that whenever I pull up anything about Cathie Wood, what she buys and sells in her timing is so laughable. Luckily she got out of PayPal a few months ago at 260. Oh. But I mean, she was in it at high, and then she waited till it started to tank before she sold, like a lot of things. But anyway, that was hilarious. I'm looking at her other holdings. I'm so distracted because then of course she's buying Square, which is just she bought Robinhood. It's like all the laughable ones. I'm sorry.
Cathie Wood is in that movie, The Big Short. Cathie Wood is the guy at the sushi restaurant that Steve Carell is talking to, and he gets up and says, short everything this person touches. I think I made this analogy like a year ago. Yeah. Short everything this person touches. And by the way, a big FU to Jim Cramer, who called Cathie Wood a genius in February of last year, and now he's criticizing her. Uh-oh. Literally February of last year, at the peak of ARK, he said she's a genius, she's amazing, and now he's criticizing her. So I'm going to defend Cathie Wood there.
Flip-flopping.
Cathie, I always knew you were stupid. I always knew you were stupid. It didn't take anything for me to know. I always knew you were stupid.
Check,
I had your back.
Yep.
All right. PE.
Okay, Paul.
PE.
I always knew. You are a coxman when it comes to words. Go ahead, Paul.
Guys, I'm doing PE and price of free cash flow 14, 16, 18, and I want a desired return of 12.5%. I always do 12.5% because you can get an ETF and make 9 or 10%. So make it worth your while to buy an individual stock and get your margin of safety. Hit the analyze button. Oh, wow. We finally have a green on PayPal.
No.
We have one green on PayPal.
It's a buy.
Guys, we have a low price of 45 to 65, a middle price of 72 to 96, and a high price of 110 to 142. Maybe it's getting up there. I did 14% revenue growth on the high side here. That's a lot. Does that mean it can't happen? I don't know. I do think PayPal has a lot of competition coming up. That's the problem. I would actually probably go lower than these growth rates because PayPal has a lot of competition coming up. They are great. They're wonderful. I love PayPal, and they own Venmo, but they have a lot of competition coming up. This is going to become even more saturated market, I have to think.
The crypto bulls are saying that they haven't even touched the amount of revenue they're going to get from all the crypto transactions.
Potentially, if crypto's still around. Yep.
Yep. AMD. Now, would you like to move into AMD?
Let's live in AMD.
I think you need to eat your words here, right, Paul? Because AMD is flossing on
Maybe
earnings.
It is. Oh. Go ahead.
Well, so
for
folks,
a take-home person, Seth is telling me, Paul, what you really mean is...
Yeah, so folks, I try to represent you out there, and I know Paul insults all of us here at one, and I really thought that I wrote down this phrase. I thought that, Paul, really, when you say you can't invest in something like PayPal or overpriced companies, you're sort of saying that my metrics that I've established over a long experience of my life will not allow me to invest in a company like this.
Okay. I will give Seth that one. Mm-hmm. But there are some companies where you're just stupid.
If you believe all this.
Yes. Like PayPal at 310, you are just stupid. Here, PayPal at this price, I can see that argument. I can see the argument happening, going, okay, like this is kind of an in-between for me.
Now that it's dropped 2/3?
Yeah, now that it's dropped 2/3, I look at the count, I'm like, okay. I actually get tingles just thinking about it. I literally get tingles thinking to myself, okay, maybe I could be wrong at this level. Mm-hmm. At 310, I'm probably not wrong. And you're stupid. But at this level, look at my assumptions. If I want to get a stock that's worth exactly what I think it's worth, and I get revenue growth of 11, 14, and 17%, and profit margin improves a little bit, and free cash flow improves a little bit.
Mm-hmm. What do we got?
I mean, we're a lot closer. We're there.
We're there.
Yeah, so I look at it going, okay, this is where I go, to me, it's not obvious, so it's a no for me. But it doesn't mean it's a no for you. Mm-hmm. This is where it's a little like, okay, we might disagree on a few things here or there, and therefore I could be wrong. But at Tesla, at $1,000 a share, no, you are really stupid. You are beyond stupid. Like, literally stupid.
Uh-oh. Okay, fair enough.
PayPal at 130?
Okay, fair enough.
Maybe it works.
People think you've been stupid on your valuation of AMD and how you've been in love with Intel more often. In fact, someone wrote, which I don't know the validity, but a 5-year return on Intel has been 48%. AMD has been 1,250%.
Yeah, it makes sense. And that's all that matters is the recent returns, right?
I see.
That's all that matters. In that case, what you're saying is ARK investments should be shut down. PayPal should be shut down. PayPal is a terrible investment. Because what you're saying is, it's called recency bias. For all you morons out there, go into Google and type in recency bias.
He's on fire today.
The only difference is I'm smart enough to realize when something gets cheaper, it is better. Just like you morons out there who, what do you guys probably do? Hey, Kyle out there, you're probably named Kyle. You probably drink Monster Energy drink and you probably wear Oakleys like this. When your Oakleys and Monster Energy drink and your grape, what's it called?
Vapes.
Whatever, are on sale, you buy more of them because you're stupid. When cocaine's on sale, you buy more of it. When stocks go on sale, I think it's better. But you think it's better when it's up.
Oh.
AMD. If you think AMD selling for 10 times sales versus Intel is selling for 2.5 times sales, 4 times more, and you think that's better, I don't know what to tell you. Market cap of AMD, of Intel, $200 billion, with $80 billion in revenue. AMD, $150 billion with $15 billion in revenue. If you think that that's better,
I see.
There's a Jeff Foxworthy. You might be a redneck if.
Yes.
You might be stupid if.
You believe.
You believe this is better. Okay, then you believe it's better. I don't know what to tell you, but you'll learn you might be right on this one, but you'll be wrong on so many others that you will lose a lot of money. I'll give you this one. Fine, I was wrong on this one, which I don't think I'm going to end up being wrong, but I was wrong on this one. Great. You will lose a lot of money in the future. That is a reality. Because people like you, we're going to call it financial Darwinism. I just created this term right now. Financial Darwinism. You will be eaten at some point. You will be the giraffe with the short neck. How many giraffes have short necks? None of them.
Only the dead ones.
Only the dead ones. That's it. And that's okay because I love making money off of you idiots out there.
Your shorts on the NASDAQ.
Satisfaction.
Yeah, your short.
Recency bias says I'm a genius because I made how much money in the last month off my short position.
We don't.
How recent do we go?
Yes, you'd like to go a whole lifetime.
Look at your recency bias.
Oh my God, look at that.
Look at AMD, by the way. In 2000, it was $40. It got as low as $1, $2 in 2015. So according to you guys, it would have been a terrible investment. Oh, this is a terrible investment. Oh, but it went from $2 to now $122. So if your window was here, you're stupid. Window is here, you're a genius. Do you ever notice where the genius comes in? The genius comes in at low levels, not high levels. You ever notice that, people?
We don't. No, Paul.
Interesting.
The
genius always comes in at the low levels, not the high levels. But you idiots out there are the ones who are excited up here. Well, I'm going to shut down the channel. I'm just kidding. By the way, I might be wrong on AMD and Intel. I will be right more often. I will be right enough where I'm going to smoke you in returns.
And I yearn for that confidence that I will be right more than I'm wrong.
Well, by the way, I'm not saying I'm going to be right more than I'm wrong. I'm just saying my rights will be much better than my wrongs.
Mm-hmm.
I don't need to be right more than I'm wrong. I just think that my rights are way better than my wrongs. Basically like a slugging percentage, right?
You know, Paul, this concept you also implement when you're buying real estate.
Oh, by the way, these concepts are, this is why I hate it when people say, I'm a real estate investor. No, you're an investor.
Investor. Yeah. The first second I met you, the first sentence, what do you do? I'm an investor. Yeah. I said, bullshit. What does that even mean?
It's a bullshit statement.
but like you recently sold a 300 unit and you were doing great. And then an owner bought it at a higher price from you because you're willing to sell, and he's not. It's just a tale of two ownerships.
By the way, he might be smart. I paid a price higher than the previous owner paid.
Mm-hmm.
It's just a matter of what I can do with the property. I just sit there and say, location, location, location. That's the stupidest thing in real estate. But everybody buys into it because it justifies overpaying for stuff. I look at cash flow, cash flow, cash flow. And the multiple I pay on that cash flow. That's it.
So the same thing goes with AMD. They had a record quarter, 4.8 billion, a 49% increase, 16.4 billion in sales.
Wait. Did anybody notice this? AMD was at 162 just 3 months ago. 2 months ago. It fell all the way to 102. Wait a second, everyone. Yes, I was wrong along the way here, but then you were wrong here. You're still not right yet. Congratulations. You're stupid.
So it's really defining the who's right and who's wrong.
What matter? So then if we can't determine this, I hate to say it, it's like abortion. It's either a life at birth or conception. It's one of the two.
Where do we draw the line?
Where do we draw the line? Here, where are we right here? And all I know is this value makes no sense to me. This value makes no sense to me.
And so for people at home that love you, what's the take home with all this?
Base everything off of present value of all future cash flows. That's every investment. We don't know the future. We don't know what the future holds. But just because a company has a lot of growth potential doesn't mean it's going to go very well. Intel has tripled its revenue and profit since 2000. The stock is down from 2000. It's tripled its revenue and profit. Let's actually look at AMD here real quick. Let's go to a max chart. In 2000, AMD was at $45 a share. Mm-hmm. In 2016, it was at $2 a share. Let's look at the revenue in 2000. In 2000, they did $4.4 billion. In 2016, they did $4.1 billion. Exactly even. The stock was down 95, 97%. Explain that to me.
It doesn't make sense.
It makes perfect sense to me.
Oh.
You overpaid at the beginning. You overpaid in 2000. It makes perfect
right.
sense to me.
The people who
you
paid
too
in
much.
2000 paid too much.
The revenue is the same. 4.4 to 4.1 billion. It's down 8% over a 16-year period, and the stock fell 95, 96%. Explain that to me.
They all overpaid back then.
You overpaid. And it's possible to overpay for future growth. In fact, it always happens.
Because Paul, I'm learning from you is when you overpay for a tattooed chef, a Palantir, and they drop by 60, 80% in a year, your downside risk is you've lost, because as you say, now I have to go up 140%
to make up for that.
To make up for that enormous loss where just a boring old company.
And this doesn't mean that our value plays can't drop. But the difference is when you have an understanding as to why you buy a company based on value, when the market's perception is negative and the fundamentals stay the same, you buy more shares. But if your entire thesis is based on the growing of the stock price and it falls, you have no more thesis. What do you make your decision based on?
Well, I think, unfortunately, Paul, is hypesters agree with you, unfortunately, but when they're your initial basis of something like a tattooed chef, or I hate to go off the rails here, but when they say it's gonna be this amazing company, then when it falls, they echo your same sentiments. Now that it's fallen 60%, I'm still in love with it because it's still gonna be that amazing company.
At least you're being consistent about that. I love it because most people don't even do that. Mm-hmm. Most people just sit there and say, oh, it's down 60%. Just like I say about Amazon. Amazon fell 95% from 2000 to 2002. If you think for 1 second that you just stayed in Amazon, you're absolutely wrong.
So I
probably wouldn't have stayed in Amazon if I believed Amazon was worth $100 a share.
So regardless of the most recent return with AMD, your metrics simply won't allow you to invest in this. It's like,
let's go to Stock Analyzer tool.
Go ahead.
Let's do 10 years and let's go with revenue growth of 15, 20, and 25%. Profit margin, I'll keep it at Intel type levels. Same with free cash flow, even though they haven't had those levels over the last 10 years. PE, let's do 20, 30, and 40. 20, 30, and 40. 12.5%. Even if it hits, it's going to take these insane numbers to happen. Okay, it takes insane numbers for it to justify it. Okay, go for it. It could happen. Mm-hmm. By the way, shares outstanding. You forgot about this one. That's the reason right there it's going to F you. They increased their shares outstanding 30% in the last 5 years. When do they stop doing that? If you believe AMD is going to grow at this, and it very well could, it actually is possible. I'm looking, okay, not terrible. But I look at it going, I don't think that's a realistic expectation for 10 years where I want the downside risk to be taken care of for me. It could make sense here, but it's going to take a lot of things happening the right way for that to happen. Oh, and by the way, 30 PE, this is the big one. I just don't see it being a 30 PE. Intel's not a 30 PE. Yeah, AMD is better, blah, 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 blah. But everybody was saying the same thing about Intel back 22 years ago. I just look at it going, okay, you might be right. I see a path to you being right. I do see that path. This makes sense. But a lot of things have to happen the right way for that to happen. And I just don't want to bank on that. That's just my opinion. That's where we differ in opinions. That's where that matters. That's where it's not you and I, it's not being stupid. It's just differing in our opinions. I look at it going, I don't think a 30 PE is reasonable. And I don't think 20% growth for 10 years for a company like AMD, which has been all over the board so many times. I've been hearing the AMD is going to take away Intel story for 20 years now. It's been going on for 20 years. And they still have 1/5 the revenue.
So deep down, why should viewers who've never seen you or this video believe in what you're saying?
The things I'm saying, if you believe it, if it makes sense to you, if it clicks on you going, wait a second, that makes sense, learn a little bit more. That's it. It's not for everybody. It isn't. But for a few people, it will be. And you're going to make a lot of money at some point. But you have to be okay being, quote unquote, wrong in front of the results. You have to be okay with recency bias saying you're wrong. That's it.
Yeah, they scurry to our AMD videos.
But they won't point out the other 10 or 12 that we were 100% right on. Right? Mm-hmm. By the way, I'm going to be wrong, guys. I'm going to have errors of omission. I'm going to miss out on companies like AMD. Absolutely. But what's less likely to happen is when I make a bet on something over a long period of time, it's going to go down a lot. Probably not as likely as maybe not doing as well. All right?
If you want to learn more about our 8-pillar process, you can click the link below. We go through the entire process of looking at the investing, at the financials, the income statement, the shares, what they're doing. And you can use the 8-pillar tool in our software very quickly to look up all the information you might need. And it's available on your phone. Go to everythingmoney.com or patreon.com/everythingmoney. And you can have the software instantly join a community of 6,000 investors from all over the world who are talking about this very subject and arguing with us at times, Paul. But it's certainly fine. So obviously, there are projections that need to be made before you invest, and you've heard ours. So if you have different ones, write in the comment below, and we'll certainly take them.
And if you like our software,
yes,
go watch our video.
For sure. That's our take. We will update you on AMD. We update you on PayPal, especially if it falls lower. Maybe it gets in our sweet spot of a value investor. So, all right, see you next video. Thanks for watching. I appreciate it.